Hi there traders, this is FxExplained and this is another Master Academy with Steve Miley. So in this Master Academy we're going to be taking a look at support and resistance, key factors in for the technical analyst. So what are support and resistance? Well, support and resistance represent key junctures where the forces of supply and the forces of demand meet, where the market might pause and in the case of support rebound, or in the case of resistance then come back lower, or if we break these support and resistance levels the market can accelerate. So let's start off by looking at support. Support is the price level or the area or zone at which demand is thought to be strong enough to prevent the price from declining further. So here we're looking at chart support, and here we see chart support, the market moving lower, hitting this chart support area and rebounding on a number of occasions. A chart support level is formed when a large number of buyers want to buy at the same price. The sellers are unable to push the market down through the chart support, and investor demand overcomes supply, or the market runs out of sellers. Support does not always hold, however, and a break below a support signals that the bears have won out over the bulls. A decline below support indicates a willingness to sell and or a lack of incentive to buy at that level. If support breaks and new lows are made, this signals that sellers have reduced their expectations and are willing to sell at lower prices. In addition, buyers could not be coerced into buying until prices decline below support or below the previous low. Once support is broken, another support level will have to be established at a lower level. So here we're looking at an example with sterling versus the yen, and here you can see on numerous occasions, 1, 2, 3, 4 occasions, the pound versus the Japanese yen holding in this 143.80 to 143.70 area and repeatedly rebounding. However, when the market eventually breaks, we get the trend reasserting itself to the downside. Now let's look at resistance. So resistance is the price level which selling is thought to be strong enough to prevent the price from rising further. So resistance levels are found above the current market price. So here we're looking at chart resistance, the market pushing higher on 1, 2, 3, 4 occasions and coming back lower. A chart resistance level is formed when a large number of sellers want to sell at around the same price. The buyers are unable to push the market price up through the chart resistance, and investor supply overcomes demand. So resistance does not always hold, and a break above resistance signals that the bulls have won out over the bears. A break above resistance shows a new willingness to buy and or a lack of incentive to sell. If resistance breaks and new highs indicate buyers have increased expectations, are willing to buy at higher prices. Once resistance is broken, another new resistance level will have to be established, but now at a higher price level. In addition, sellers could not be coerced into selling until prices rose above resistance or above the previous high. And here we see the New Zealand dollar versus the Swiss franc. And you see the market attempting 3 times to break above this 69.10 to 69.22 area and eventually cannot break through. And then the sellers win out, the bears win out, and the market eventually reverses and moves back lower. Another principle of technical analysis stipulates that support can turn into resistance, and the opposite is true, and vice versa, resistance turning into support. Once price breaks below, for example, a support level, the broken support level can often then turn into resistance. A support break signals that supply forces have overcome the demand forces. If the price returns to this old support level, there is likely to be an increase in supply and therefore resistance. And then conversely, resistance can turn into support. And here we see an example. Here we see the example. The market moves higher, dips back lower, breaking through resistance, but then the market comes back down lower and retests the old resistance, and now the old resistance is support. And again here, the market tests back lower. The old resistance here now becomes support here. The breakout above resistance proves that the forces of demand have overwhelmed the forces of supply. If price returns to this old resistance level, there is likely to be an increase in demand and support will be found. So in today's Master Academy, we've looked at support and resistance. Come back and see us soon. If you have any questions about this article or this video, please leave a comment below and I'll come back to you.